Hey everybody, Smart Silver Stacker here, and you might notice a little hint of levity in my voice today because gosh, we really have a doozy for you today. If you hear me laugh throughout this video, it's not necessarily because things are funny, because they're not. They're kind of scary, but it's more just because they have gotten so absurd. And here's the headline that I want to look at today from AP. With deficit falling, Biden highlights fiscal responsibility. Now, I feel like that's pretty much the punchline right there. I could probably just cut the video right now and we could all have a good laugh. But if you want to stick around and hear me pontificate about why this is so absurd, then stick around. So let's go here to the article. President Joe Biden plans to highlight deficit reduction in remarks Wednesday at the White House, noting that the government will pay down the national debt this quarter for the first time in 6 years. Oh, that's good news. Let's read on here. Biden will emphasize how strong job gains have increased total incomes and led to additional tax revenues that have improved the government's balance sheet, said a White House official who previewed the speech on condition of anonymity. Okay, so wow, that's good news. Total incomes are rising. Well, let's take a look at the numbers here and see exactly how much they're rising. So here's a chart from the Atlanta Fed of wage growth among full-time and part-time workers. And we can see that, in March, our year-over-year increase, our 12-month moving average, is 4.5%. Well, that's pretty good, right? Yeah, that's fine, except that you have to remember that year-over-year inflation for March was 8.5%. So basically, everybody just took a nice pay cut, is how you can interpret that in real terms. And it's not just me saying that. We can take a look at this press release from the Bureau of Labor Statistics from back on April 12th. And this first paragraph sums it up pretty nicely. Real average hourly earnings for all employees decreased by 0.8% from February to March, seasonally adjusted, the U.S. Bureau of Labor Statistics reported today. This result stems from an increase of 0.4% in average hourly earnings, combined with an increase of 1.2% in the consumer price index. So yes, wages are rising, but they are not rising as fast as prices are. So yeah, people are getting a little bit extra devalued fiat currency in their paychecks, but then when they go to spend it, they don't get as much stuff for it. So, wages might be going up in nominal terms, but they are not rising in real terms. And real terms are really all that matters when it comes to wage growth. Now back to this article from AP. Besides the quarterly reduction in the national debt, the Treasury Department estimates that this fiscal year's budget deficit will decline $1.5 trillion. That decrease marks an improvement from initial forecasts and would likely put the annual deficit below $1.3 trillion. As if a deficit of $1.3 trillion is something to brag about. I mean, yeah, maybe they'll shrink it a little bit. Of course, it's only May, so God knows what could happen between now and the end of the year. Don't forget that the Fed is raising interest rates and we are moving into a recession. So, if something happens in the markets and the Fed is forced to change direction, you can guarantee that there's going to be some kind of government bailouts as well, and fiscal policy is also going to loosen up. So, their projections don't mean a whole lot, but even if things go in line with their projections, which, is probably unlikely, again, $1.3 trillion deficit, not really anything to brag about. Also, I would like to point out that there's another deficit that we should be looking at. This is a headline that we just got today. U.S. trade deficit jumps 22% and tops $100 billion for the first time ever. It was just a couple months ago that the annual trade deficit exceeded $1 trillion for the first time. Well, now it's jumped in 1 month 22%. So that is a huge move up. Now, every single month in terms of imports and exports, we are in the whole $100 billion. And, you got to wonder how long that can go on for. Because basically, this means that our main export is fiat currency. It's numbers and computers. Whereas the rest of the world is sending us real goods, real materials. They're out working in factories, making phones and electronics. They're down in mines, digging metal out of the ground. They're working on oil platforms, extracting oil and hydrocarbons out of the ground. And what are we sending them in exchange for all this stuff? Numbers in a computer. So you kind of got to wonder, especially if you're moving up at 22% per month. I mean, that is obviously not sustainable. There is no way that we are going to be able to maintain the dollar's world reserve status. There is no way that we are going to avoid massive inflation. There is no way that the rest of the world is going to keep sending us all this stuff in exchange for just imaginary numbers in a computer. It is absolutely unsustainable. And back to what Biden's saying here. The Democratic president has placed renewed emphasis on deficit reduction going into the midterm election, with administration officials saying that the burst of $1.9 trillion in coronavirus relief approved in 2021 has already paid off in the form of faster growth that now makes it easier to stabilize government finances. Yeah, that relief is all paying off so much that we just got a decrease in GDP of 1.4%. We just saw the U.S. economy shrink for the first time since the early days of the pandemic. So all of that stimulus clearly working very well. I mean, basically, we've already burned through all of the positive effects of that stimulus. Now we're dealing with the hollowing out of our economy, the reduction in GDP, and also the inflation. And you've got to think, if GDP is falling 1.4%, they're pricing that in dollars. So if the dollars are devaluing at a rate of 8.5% year over year, and then you also see US GDP shrinking in nominal terms, how much is the economy shrinking in real terms? That is a very important question for all of us to be asking moving forward. Back to this article, because gosh, this is just a goldmine of laughs if you ask me. Let me know in the comments below what you think the most ridiculous claim that the president is going to make at this speech is. I'd be curious to know because there's certainly several of them here. Let's see, skipping forward ahead a little bit, Biden hopes to draw a sharp contrast with former President Donald Trump, who he beat in 2020. Trump, among a multitude of promises, pledged to lower the national debt, yet failed to do so during any financial quarter of his presidency. Biden has repeatedly taken aim at that broken promise. Earlier this week, the Treasury said that it expects to pay down $26 billion in privately held debt from the April to June quarter this year. However, the hope to reduce the debt may be dampened by the Treasury's expectation to borrow $182 billion in privately held debt from July to September. And, this is exactly the sort of thing that politicians love to tout. They say, hey, look, we're paying down $26 billion in debt. And then they go and borrow $182 billion and they call this progress somehow. And I mean, it's fair enough to say that President Trump didn't reduce the national debt. He didn't. And, I know probably I'll get some angry people in the comments saying, all we need to do is elect Donald Trump to take care of the national debt. And that's not true. Politicians on both sides of the aisle have managed to increase the debt for a long time, and it's gotten us into this position where, don't forget, we've got $30 trillion and growing in debt. And I'll go ahead and say it right now. Biden might be talking about fiscal responsibility and shrinking the debt, but that is all nonsense. It is all absolutely nonsense, and I will eat my lunch if we ever see a national debt under $30 trillion under President Biden, because that ain't going to happen, folks. You heard it here. If we see a $29.99 trillion debt under Joe Biden, I will eat my shirt. I will, because it's not going to happen. There's no way. I mean, we might see the deficit shrink. The deficit shrinks, the deficit grows, but it's still a deficit. There is not going to be any surplus because Joe Biden's idea of fiscal responsibility is raising taxes and then increasing government spending. And all that's going to do is hollow out the economy. It's like taking a blood transfusion from your left arm and trying to put it in your right arm and losing half the blood along the way. The government is not an efficient allocator of resources. This is not going to lead to anything but further hollowing out of the U.S. economy, which is already pretty well underway. And then finally, when unveiling his budget plan in March, Biden said, after his Republican predecessor's fiscal mismanagement, his administration is reducing the Trump deficits and returning our fiscal house to order. And this is what we always hear from president after president after president, is that they inherited this mess and they're cleaning it up. But the thing is, they just continue to do what their predecessor did before them, and that is spend more money than we have. What they do with taxes doesn't really matter, because if they can't fund government spending via taxation, which clearly they can't because we still have, massive deficits. They're just going to fund it via inflation because it's got to come from somewhere. So if the debt's not getting monetized and it's not getting printed, you got to tax it. And taxing isn't politically popular. Although, I'm sure Biden will take a crack at it. They don't like to raise taxes in Washington. What they like to do is tax you via inflation. And it's the same thing. It's just a hidden, more insidious tax that affects the economy in a worse way because, people, if they really understood the cost of all the government that we have, they probably wouldn't vote for it, because they would be having a lot of their money taken away via taxation. But inflation is a much more insidious tax. It's kind of hidden. It's an unseen thing. And a lot of people, I don't put together the two and two that, we've got all this deficit spending and these massive debts and deficits, and groceries and gas are getting more expensive. That is not connected in a lot of people's minds. And, that's by design. It's not a secret that is how they get away with it. And as far as gold and silver go, we're seeing them take it on the chin again today. Silver down almost to $22, gold down $18.63, so well under the $1,900 level. We're seeing that as the Fed is tightening policy, moving into a recession. We're seeing it as we still, regardless of what Joe Biden says, we still have massive government deficit spending. The national debt is out of control. We are on the verge of World War III now, it seems like. We've got a looming food crisis. All these things are happening, and gold and silver, which should be up, by any measure, they should be up, are taking it on the chin. Now, physical silver is a little bit different. If you want to buy an ounce of physical silver, still, you're going to be paying considerably more than $22.27. If you want to buy a silver eagle, it's going to be way over $30. If you want to buy junk silver, it's going to be over $30 an ounce. If you want to buy some generic silver, you're probably still going to be paying $25, $26. But nonetheless, that is still very cheap. And so I just view this as a buying opportunity. You still want to keep some powder dry because, of course, prices could fall further. But clearly the market is behaving irrationally here as far as I'm concerned in terms of the price of the precious metals. And all you can really do when you see that is say thanks for the sale, because clearly metals should be much higher, and I think eventually the market will come to its senses. Although, how long will it take? Who knows? They always say the markets can remain irrational longer than you can remain liquid. The good thing about buying gold and silver is you stack it, you set it aside, you forget about it, and you keep moving forward. And eventually, I think there's going to be a big payoff for those of us who are doing that. So let me know what you think about the president and all of his new fiscal responsibility. Do you find that as laughable as I do? Let me know in the comments down below. And if you'd like to see more videos about gold, silver, and the economy, then check out the videos that are popping up on your screen right now. And I will catch you next time. Thank you all very much for watching. Happy stacking. Stay safe. Smart Silver Stacker out.